Welcome to How They Won. I'm your host, Bob Burns, and every week I get successful real estate professionals across North America to share their secrets of success with you. I've got another timely interview to help us get through the COVID-19 crisis together. This week, I interviewed Ted Jeschke with PenFed Credit Union. Ted is a 20-plus year veteran of the mortgage industry, and I am so grateful that he was able to share his insights and experience with us. Ted and I discussed a big-picture view of the current state of the mortgage industry, tips for real estate agents on interviewing the right lender for the current situation, RON, or remote online notarization, and whether it's here to stay, along with several other timely and important topics relevant to doing business in the COVID-19 environment. You can learn more about PenFed Credit Union at penfed.org. Thanks for listening. Let's start the show. This week's episode is brought to you by Leaders Edge Coaching. Full disclosure, I am a trainer and a coach with Leaders Edge, but like you, I can choose to do business with anyone. But I choose to work with Leaders Edge. Leaders Edge has the right experience, knowledge, and tools to help you take your business to the next level. Whether that means closing more transactions, or improving your work-life balance, or building a team the right way, the coaches and staff at Leaders Edge can help you achieve your goals. For more information, email coaching@howtheywon.com. That's coaching@howtheywon.com. I'd like to start today's show with a confession. When I extended the interview to my guest, I never thought he'd actually be able to come on the show. Not because he's not a great guy, because he absolutely is. I didn't think he'd be able to come on the show because he's a senior executive with one of the largest credit unions in the U.S. And banking institutions, especially large ones, are typically pretty conservative about allowing these kind of things to happen. So before I begin, I want to take a minute to thank PenFed Credit Union for allowing my guest to come on the show. As you know, if you've been a longtime listener, our goal for How They Won is to raise the bar for the entire real estate industry. And I got to tell you, I'm just thrilled that PenFed Credit Union is so willing to get involved and contribute to that mission. Really, really cool. So anyway, let's get to today's guest. My guest today is the divisional sales manager of the Southern United States for PenFed Credit Union. Prior to that, he held senior executive roles with Guaranteed Rate Affinity, Fairway Independent, Homeowners Financial Group, Mutual of Omaha, and several other regional or large national mortgage lenders. I wanted to have him on the show because he brings so much experience to the table. And while no one's been through a crisis like we're all facing now with COVID-19, my guest has managed through and built an extremely successful career through all the highs and lows of the mortgage business for the last 2 decades. And I know he's going to bring a lot of wisdom to the table for everybody listening today. So without further ado, Ted Jeschke with PenFed Credit Union, thank you so much for coming on the show.
Bob, thanks for having me on the show today. You know, PenFed is very appreciative to Leaders Edge, as well as your time today, to kind of get the message out and talk about what's going on in today's environment, making sure that agents and originators are teamed together to make a successful transition as we go through this event that's currently occurring in the marketplace.
Yeah, I like the word event because events have a beginning, middle, and end. And the end is my favorite part of this event.
Exactly. I totally agree. I'm looking forward to it.
All right. So before we dive into the really meaty stuff, I'd like to start with a little bit of, I think, an interesting question that's not about real estate. And Ted, I think I saw that you're a Tampa Bay Bucks fan, and I wanted to get your thoughts on Tom Brady coming to town.
TB12, man. We are ready for Tom Brady. Let me tell you, we're going to bring home the Vince Lombardi trophy again. I can see it. You know, Tom's going to be able to provide lightning execution in our offense that Jameis Winston did a good job, but not a great job.
Wait, was Jameis Winston? Is he a pro quarterback?
Yeah, exactly. Right. He's a good guy, but you know what? We're happy to have Tom home here in Tampa. And we're looking forward to bringing the Super Bowl trophy back to Tampa Bay.
Well, good luck with that. I am a lifelong fan of the Minnesota Vikings, and we have yet to win a Super Bowl. And for the last 3 years in the Kirk Cousins era, I have been hopeful and confident that this year is the year. So maybe we'll see you along the way to the Super Bowl.
Maybe we'll be up in Tampa Bay. That's where the Super Bowl is going to be this coming year. So
how cool
would
that be?
Let's get the Vikings down here. We'll connect.
That sounds really cool. So, okay, let's get into the meat of this. We've been, I don't know, depending on where you mark the start time, 4 weeks, 5 weeks, 6 weeks into this COVID-19 thing. Ted, can you just give us a 30,000 foot state of the mortgage industry in general right now?
Sure. These are definitely challenging times for us. What we're starting to see is that there's a flight to capital that's going to be critical to withstand the next 2 years in the mortgage industry. There's a lot of articles out there, as well as interviews from senior leadership in the mortgage industry, such as David Stevens, the MBA, et cetera, pointing to the fact that this could take up to 2 years to recover and get back to where we were before. Right now we're looking at forbearances, modifications, loan defaults. All of this is going to put a large strain on the mortgage industry. And there's huge volatility going on right now in the marketplace. The creation of margin calls from broker dealers who wrote hedges to mortgage bankers. The hedges that the mortgage bankers used to protect themselves against rate increases are disappearing. And now some lenders are facing margin calls eroding their working capital and threatening their ability to operate efficiently. So definitely a huge challenge that came out of nowhere. But you know what? We dealt with it before. We'll deal with it again, and we'll prevail.
So these short-term liquidity issues, these margin calls, et cetera, I guess I shouldn't characterize them as short-term necessarily. Are they short-term? Is there a long-term liquidity issue in the mortgage market, or is this just a bump in the road that we're going to manage through?
You know what? That's really going to have to be evaluated from the lender's platform, whether you're a correspondent or a federally chartered institution, and taking a look at the capital that they have to withstand the next couple of years. It's going to be interesting. We're already starting to see a number of lenders pull back on product, discontinue product. Some lenders have taken the position that they're not hiring. Some lenders have taken the position that they're going to do a reduction in force. So depending upon their position in the marketplace and their strength of capital is really going to prevail on who's going to survive.
It's so interesting that it's all about, in times like this, for the mortgage business and in the real estate business, it's all about your balance sheet. Do you have the arsenal to bridge the gap between now and better times? So from an individual real estate perspective, I know we're talking big business and Wall Street and stuff like that, but the same principles apply to you as real estate agents listening to this. Is, do you have the assets to get through to the other side of this so you can keep your doors open when we return to, I don't want to say business as usual, but business closer to usual? So a lot of changes in the mortgage business are happening and are probably yet to happen. Time will tell, as you said, if those are long or short term. But Ted, what hasn't changed in your business or the mortgage business in general right now?
You know what? If I look at what hasn't changed, that kind of, in my mind, I think about the previous crisis in 2007, 2008 compared to the crisis today. Back then it was subprime and Alt-A. Today we call it non-QM. So, in both situations, they emerged, they ramped up. And in today's crisis, in both situations, they've disappeared. In both situations, FHA ramped up. And again, in both situations, lenders are tightening up their FICOs to 660 or their DTIs to 43% or less, or even exiting FHA. The blessing with PenFed is that we never really we didn't have FHA. So we don't have that legacy problem that a lot of other lenders are going to have to work through on their platforms, and it could erode some of their capital. When I look to, what's changed and what hasn't changed and compared to the previous crisis and today, the largest difference is maybe the big box correspondent lenders who lack capital to maintain warehouse lines. They may not be able to fund off their warehouse lines as quickly as they did in the past, which is going to limit their product offerings to agents. So, you've got to, as an agent, you want to stick to a lender who can withstand the storm here. And you know what? Let's pray for a short storm. I hope it's not 2 years. However, flight to security, flight to safety, and reliance on a lender that has the capital and the strength to make it through is incredibly important. And that's where, PenFed lies. We haven't changed. We've got the capital to weather that storm.
I was just going to ask you about that from an agent's perspective, boiling this down to something really, really simple. Does that mean shifting more towards a regional to a local type lending institution, or away from a mortgage bank to more of a credit union environment? How should an agent navigate this from a banking perspective, I guess?
Good question. So the agent really needs to do more due diligence on selecting their lender. They've got to really investigate on the ability for that lender to deliver on the promises that they have. And also, do they have the right product mix to enter into the market that we're in today? We've got a great product, 97% loan to value. It actually comes with unemployment insurance. It's not an FHA product. So when you speak to agents and they say, hey, you've got a product at 97 for first-time home buyers that has unemployment insurance, that resonates, because that's what that buyer is listening to in the marketplace today. And it provides them the security that they want to hear in order to go through on the transaction.
I just heard a bunch of mouses on computers click to PenFed.org to check out that program. I want to ask you more about that later. But beyond that, agents aren't typically super savvy about how to distinguish between a quality mortgage lender and one that they need to maybe steer their clients clear of. What are some ways, or maybe some questions to ask, or some things that agents should be looking at to help find the right lender in this really, really turbulent environment?
Great. It's a good question. So, and it leads to, actually, have you ever read the book QBQ, Question Behind the Question by John Miller?
No.
This is a great book. And for your audience, you know what? If you contact me, I'd be more than happy to give you information as far as how to get this book. But QBQ does this. It trains a salesperson on how to ask a question and then continue to ask questions until you get to the point where you found the solution to resolve your problem or get the information to make a decision. And that's an art, right? Some salespeople, we forget to ask those questions and drill down. And that's what we've got to do in today's marketplace. The agent needs to use QBQ, Question Behind the Question, with their lenders in order to drill down on exactly the stability and safety they're going to be able to provide their buyer. And I'll give you a couple examples. So, what should they be asking? That the agent should be asking, do they use their own capital? Does the lender use their own capital to fund their loans, or do they utilize warehouse lines? And Bob, if you go back to 2008, some of the listeners may recall that period, but there were buyers sitting at tables and funding numbers did not come across and keys did not get exchanged across the table. That's a huge risk for the agent. So they need to drill down in QBQ, that question behind the question, with their lenders. A couple of other things they could probably look at, is ask them if they want to work with that lender for some reason. Maybe it's because of product, relationship, whatever it may be. Are they experiencing, is that lender experiencing any delays in funding? What I'm starting to see today is that some lenders have abandoned their agent base for the quick refinance wins going on in the market right now. That's not a long-term partner in my case. The agent wants to be cautious partnering with a lender that's practicing in that respect, in delayed fundings. The third thing I'd kind of ask my agents to really focus on the QBQ is ask their lenders' LOs, the mortgage loan officers, if they're engaging agents, assisting them with new buyer opportunities, marketing, and training. And Bob, this is why we're partnering with Leaders Edge. We want to bring a value add to our agents showing them how to hunt with Leader's Edge in today's environment, because the field has changed overnight. There's a different way in which we need to communicate and interact with these buyers to land the deal and close the action.
That's fantastic advice. And Ted, you know what? As a sales trainer, it reminds me of objection handling techniques that we teach. The client, the seller says, well, I want to think about it. And the novice salesperson will just accept that and be like, okay, here's my card. I'll call you tomorrow. But the really experienced agent will ask those questions behind the question that you're talking about of, well, why do you want to wait? What would happen? What's going to be different tomorrow than that's different today? Was it me? Was it the commission? So you not accepting the first answer and digging deeper. It's cool that a sales skill can also help you as an agent evaluate the lenders that you're speaking to. And Ted, those questions are tremendous. And I hope people rewind this and write those down. Those are 3 extremely powerful tools that agents should be using in all times, but especially now to evaluate the lenders that they're sending their buyers to. Good stuff. Thank you for that. Now let's switch over to kind of more of a short-term view. A lot of lenders have taken on some temporary measures to get through this crisis. For example, I'm seeing a little bit of loosening on wet ink signatures and a move to remote online notarization as an example. Do you think any of the temporary measures that lenders are doing today will stick around post-crisis, or are we going to return to the way business was pre-COVID-19?
I'm a true believer that adversity creates opportunity. So out of this, such as Ron, you referenced remote online notarization. Previously it's been out there in the marketplace, but it wasn't largely embraced. Now, overnight, it's a necessity. A number of lenders are jumping in, and also the agents are asking that we provide Ron's service or similar services to Ron in order to close the transactions. I'm hearing horror stories out there where, title companies have pulled up to the buyer's door. They drop off a package, they step back, and the transaction is not very professional. And it's not a memorable experience that the buyer is going to refer back someone to the agent. So you've got to make sure that, as we go through this crisis, that we're creating these new devices that can be used in the future. That we're actually providing a good experience to the member at PenFed as well as the buyer on the agent side. Most importantly, I think what's going to come out of this is changes in human behavior. I see agents really prefer to work with originators in the marketplace. And, how we interact, conduct business, and trust one another to develop new communication practices is going to be critical. The buyer, which is our member, of course, the agent and the loan officer engagements are going to be changed here forward because of COVID-19. And, that depth of the relationship will become incredibly important as we learn to trust each other on a new level and execute the transaction flawlessly.
I love that. We're seeing that on the brokerage side as well. A lot of these, for lack of a better term, alternative models are really struggling right now because there's been a flight back to relationship in this kind of environment, a flight back to relationship and competence and a proven track record. And what you said about communication and relationship between all of the moving pieces of the transaction really, really resonates with me. And I hope you're right, because I think the further we get away from that and from the service and relationship aspect of our business, the more we as real estate professionals, both on the brokerage and the lending side, the more we commoditize ourselves. If we allow the relationship to go away, the more replaceable we become in the transaction. So kudos to you and to PenFed. Take us inside your operation. The unprecedented times. You've probably got a lot of people working from home that don't normally work from home. I'm sure you've got kind of a skeleton crew keeping the lights on. How are you managing through this as a leader from a day-to-day basis?
Sure. So, we complete over 95% of our transactions remotely and monitor it all in real time for safety and security. During this crisis, we continually evaluate the latest information available at a national and local level to protect our members, our referral partners, and our employees. We've got nearly 2 million members nationwide and countless referral partners who provide us business, and they rely on us to meet their financial needs and expectations. During the transition, working from home, PenFed today originates in all 50 states and U.S. territories. We've got about 150 originators and 200 or so operational folk that now work from home. And I got to tell you, kudos and hats off to our executive team and our supporting partners internally that helped us through this transition, because it went seamlessly. I can tell you, I didn't even know that it was happening, and it happened pretty much overnight. We didn't miss a beat. So it's really interesting on how our team is pulled together to make sure that we're meeting the members' expectations and we're delivering the correct execution for our referral partners.
It's a testament to your leadership. Right now, this is what I call a leadership moment. Anyone can sail a ship in calm seas. It's the true experts and the true leaders that can safely navigate a stormy situation like we're in right now. From an interest, I want to keep drilling down on this, Ted, because I see
Sure.
some craziness out there in general with lenders. Interest rates are a little bit, don't make a lot of sense to me, because we saw like the interest rates plummet, but then we saw them spike back up. And what I've been told by a lot of people is that was just based on not on the cost of money necessarily. It had to do with throttling throughput from a servicing, from an underwriting perspective. A lot of banks got flooded with refis when the rates dropped, and they artificially raised rates to throttle the demand. Do you see that happening too? And no one can predict the future, but let's say we churn through the refi situation. Will rates fall back down? Will they stay where they are? Look in your crystal ball.
Yeah, exactly. Right. It's great having nearly $25 billion in capital at PenFed. We're in a super position in order to make sure that we can fund deals on time and provide the service levels required for our referral partners. Many correspondent lenders right now are having a difficult time, as we discussed earlier. They're concerned about their capacity, their capital, their warehouse lines. They're trying to judge where they are in the marketplace and how well they're going to weather this storm as we come through it. So it's all over the board. We continue to offer best price in market. We continue to offer no processing fee. We continue to offer no underwriting fees, and we quote with no origination points. Additionally, if someone refers us, if an agent refers us a deal, we have a program called Member Benefits, and we can provide that buyer, future member, with a lender credit up to $2,000, depending upon the transaction. And that's in addition to being best in price and the fees that we just discussed that we don't offer or don't charge. So, we feel we're handling the crisis incredibly well with our leadership. We're confident that we can deliver on any agent that brings us a loan today.
I like that $2,000, let's call it a buffer for lack of a better term. I'm hearing from my coaching clients story after story about lenders changing the conditions to close on the eve of the closing. We want a 6-month ability to pay, for example, or the credit score changed or the DTI changed. And having a little bit of even a couple $1,000s to play with could ultimately mean the difference between keys and no keys at the closing, right?
Exactly. To protect themselves, there's a number of lenders out there, like correspondent lenders, that are starting to add overlays on the underwriting, and they're tightening up in that respect. At PenFed, I haven't seen additional underwriting overlays today. But you know what? We lived through that back in 2007, 2008. So it wouldn't surprise me if you see more lenders come out with some overlays in the marketplace.
It's created some challenges. So it gets back to the vetting that we talked about earlier. Agents should rigorously vet the lender that they're sending their buyer to make sure that when the time comes, they can actually close without those last minute stressful surprises. So I want to get back to kind of management right now. And you've got a pretty big team of mortgage originators that you lead. What guidance are you giving your team right now, Ted? What are you telling them to do? What are you having them focus on to help bridge through this crisis?
Sure, Bob. I'm prior military, 6 years in the Air Force, and I reported directly to a 2-star general. So, I've got a different concept than a lot of my peers as far as a style and coaching. I'm not an authoritarian, right? But I take a different perspective. And really, when I coach my LOs, I like to keep them on task with 3 repeat messages. And one of them is identifying their top targets. I really like my loan officers to focus on about 10 relationships maxed, but those 10 relationships are probably the 20% of the agents who do 80% of the transactions in the marketplace. So making sure that we service our top agents through this crisis is going to be critical. It's going to be very important to maintain that relationship and that trust that we talked about earlier. Second thing that I kind of keep my loan officers on task with is a concept called war rooming. And I'm not sure if you've heard of war rooming, Bob, but I picked it up from David Stevens at Wells Fargo. But war rooming is not only for us to do with our referral partners, but also for us to practice with our members and our borrowers. We get to know them personally. We get to know them professionally. We get to know their likes, their dislikes. What does it take for them to move the needle in their business? And I want my loan officers to identify and resonate with that so that when they have meaningful calls once, twice, 3 times a week, we're drawing back to that war rooming documentation and method that we train them on. And thirdly is, I really want them to manage their business and execute flawlessly. Manage to exceed the expectations without announcing your intention. It's kind of a military thought on the fact, and I hate to resonate with this or bring it up, but it's kind of like letting your enemy know that, you're going to be there to fully execute. However, making sure that you exceed the objectives of the outcome. And, that's critically important for us as loan officers to make sure that we're executing flawlessly with our business plan, with our referral partners.
Your 3 rules can apply and be just as effective in a quote unquote normal time as they can during this situation that we find ourselves in, this event, to use your words earlier. And to me, that's the mark of good leadership and good management as well. Is you should have a system of doing business that works in every type of situation. And I especially like your war room concept, because a war room concept is all about shortening the communication gaps. Everyone gets the right information at the right time, and we can move forward as efficiently as possible. We're eliminating that lag time. Really, really great advice, Ted. Thank you for that. I want to end with one last question. And this has been a tremendous interview, and I want to thank you even before we get to the end. But my last question for you, Ted, is, you're speaking to a lot of real estate agents right now who are trying to figure out what to do, how to do it, how to manage through, how to build their relationships, how to make sure the engine is warm when the light turns green again at the end of this thing. What's the single best piece of advice you think you can give to everybody listening right now, with just in general? What's your best advice for agents right now?
Refer back to the QBQ is just, making sure you're asking the correct questions and you're drilling down to find the answer that best suits your buyer's needs. And also the stability of the organization. Do your research. PenFed has and always will have a strong relationship with the regulators. And you can see now in this environment, there's some separation going on with lenders, specifically correspondent lenders, and the regulator on how to handle this crisis. The beauty about PenFed is we're headquartered in McLean, Virginia. Our board of directors comprise of former top government officials, generals, agency leaders, and their main interest is protecting our members. So PenFed is a not-for-profit institution. Our earnings are returned to members and offering those members lower interest rates along with the no fees that we mentioned earlier. So the agent really wants to evaluate that lender and make sure that they're going to support today's environment. Stability, strength, capital. You're seeing some lenders right now that may run and hide from the crisis and executing in only their best interest. They're not executing in the interest of the buyer, the member, as well as the agent. So now is the time to align yourself with capital, stability, and trustworthiness.
And I'll add to that process, because you can have all the best intentions in the world, but if you don't have an underlying process to actually execute on that, it's all for nothing. And it sounds like you've got that fourth pillar of process pretty strongly in place at PenFed as well. So we'll wrap it up with that. I thought this was excellent. Ted Jeschke from PenFed Credit Union, thank you so much for coming on the show. And thank you all for listening.
Thank you.
You're welcome. You were great. Be well, everybody, and we'll talk to you next week.